Hello and welcome to another edition of Stockwatch on this Thursday, the 3rd of February. So big earning calls last night as Facebook, or Meta, Facebook's parent company, and also Qualcomm. It's a bit of a mixed reviews there. Qualcomm actually exceeded expectations while Facebook missed expectations vastly. And in extended trading, supposedly, the stock dropped over 20%, which is quite significant for Facebook. So we'll see when the markets do open what that will mean for the stock itself. Now let's just take a look at the numbers. So earnings per share came in at 367 versus 384 expected, and revenue came in at 33.67 billion versus 33.4 billion. So this is actually quite a dent in the armor for Meta or Facebook, whatever way you want to look at it, as the company recently renamed itself Meta to try and get into the advancement of this extra internet phase that it's trying to push for 2022 and beyond. However, daily active users were slightly down during the fourth quarter. That's the last 3 months of 2021. So we'll see how that impacts the stock when it opens later. And Qualcomm beat expectations for revenue and earnings as sales were pushed up by 30%, quite significantly. However, there was a big pop in the stock, which we'll look at shortly. And businesses grew by 35%, driven by handset chip sales as well. So we've heard about this chip shortage during the pandemic, but it did not seem to affect Qualcomm quite significantly. So we'll see how that plays out. So let's get into the chart straight away. So Facebook, with the assistance of the Ichimoku cloud, as you can see here, it was actually striving for another leg higher. However, we know that this 20% drop is coming into fruition when the stock does open. So we will see a dive back down, and more significantly, back down to the recent troughs that we've seen under 290. And also, with that being said, we are seeing a little bit of a bearish divergence anyway, but without this earnings report, we could see another push really, really detrimental down. How further down can it go, and will it stay? Well, we'll have to wait and see, as earnings season is such a big call for these big Silicon Valley companies, and we'll see if that what will happen to the stock. So on the 4-hour chart, not too much to take into account at the moment. We're waiting for the markets to open shortly to see what the repercussions are from the big swing low. All I can say at the moment is we did have this choppiness at the moment, so we were looking for another leg down anyway on our technical analysis. However, now we have confirmed the leg down, so we'll see what happens when the markets do open shortly. And let's just take a quick look at Qualcomm as well. Qualcomm very, very buoyant at the moment, so we'll just go into the daily chart first of all today, and as you can see, a big pop in the stock there on the earnings review. However, we are looking that there could be exhaustive measures coming into fruition. As you can see here, we did get this kind of choppy action in the last few trading sessions, and another leg down, which was quite significant because you see the vast growth of this Ichimoku cloud at the moment, meaning that engulfment will probably take a little bit more time to break out either to the upside or the downside. So with this being said, we had this pop to the upside, but there could be exhaustive measures, a sell-off, and another leg lower. So when the market does open, just be sure to see that we are looking at it being a little bit biased towards the downside. And we'll just take a look at the 4-hour chart as well, just to see what the cloud is looking like. As you can see at the moment, the cloud is very, very thin where we pushed through prices. Let's just remove these drawings at the moment. So the cloud is very thin where we push through prices. However, in the near term, we are looking for another leg lower and possibly an engulfment into this particular Ichimoku area at the 170, 175 region, currently trading at 188. So when the markets do open, just be set for this a possible retracement. As I said on the trending topics video not so long ago, Microsoft buying out, making an acquisition for Activision Blizzard. Activision Blizzard is now currently trading 10% lower than it did have, when it actually popped the stock a couple of weeks ago. So just be careful for these retracements and possible entire reversals when we get these big news events for the stocks. So that's all for the Stock Watch today. Once again, thank you very much for joining me, and we'll speak again tomorrow for more earnings updates. Bye for now.